Hey traders, welcome back to the weekly Forex Forecast. We've just released the brand new Hedge Dash Help Center. So for those of you watching the videos and asking, what do the levels mean? What process are we using? Why do the levels work? How do the levels work? You can now click on the Hedge Dash Help Center. You don't have to be subscribed or signed into Hedge Dash, and you can go through the information of the features that we're using in the GMT videos. And many of you have been asking for a while. We've got this up here now, and you can also go through and read about the projected volatility ranges that I get probably asked about the most, probably because we use them the most. And these, of course, are the projected ranges that the market is likely to trade each week. And this is what I'm primarily looking to fade markets from, to short from the upper bound or go long from the lower bound. So if you want more information on what we're doing here in the GMT videos, you can click the link in the description below for the Hedge Dash Help Center in the description and also in the pinned comment below. Okay, so let's have a look at the scores for the coming week, and you can see at the top of the ranking system is a New Zealand dollar here. So going into next week, the one currency to the upside that I'm most interested in trading is the New Zealand dollar. Now, it does have to be said, there is a New Zealand interest rate decision coming up, so I'm going to be trading the New Zealand pairs to the long side, given the chance, after the interest rate decision, not before, because before it's probably going to chop around and do nothing, and then after the interest rate decision, we're probably going to see volatility. So I don't want to be involved with that before the interest rate decision coming up at the start of next week. I will be trading those after. The second thing to note is the Euro and the Aussie sitting with a rank of 4 and 5, but also a performance metric of 0, shows that these markets are really neutral. They might be the top 3, relatively speaking, but generally speaking, why I would want to be long the Euro and long the Aussie this week is primarily on the basis that they look set to outperform the other currencies. Not so much that they are inherently strong in and of themselves. And what we're seeing here is we're seeing a bit of a regime shift in the Forex complex, where we had the hot CPI report, we had the dollar kind of popping a bit higher, we had the pound and the euro start to weaken, but we're still kind of in the middle of that crossover. We're not quite into a new regime. We're kind of seeing in the Forex markets here a bit of a mix and mash, to be honest with you. There's no clear direction. So very simple for us, just going in, trading the data that's in front of me next week. So that's going to be New Zealand dollar to the upside, Euro dollar to the upside, as well as Aussie dollar to the upside. And I'm going to be looking at trading them primarily versus the yen, New Zealand yen to the upside, New Zealand CAD to the upside, and also New Zealand dollar to the upside. Now, last week, I was actually doing the opposite of some of these. I was looking at the dollar. The dollar bounced nicely. We saw euro dollar almost top tick the weekly upper bound last week. Pound dollar was also a good short from the upper bound. But this week, we've seen a shift. And going into this week, although I think we're going to see continued upside in the dollar, although I think we're going to see the inflationary currencies, the commodity currencies rolling over, it looks like there's still a little bit of risk on left in the tank. We're not quite into risk off just yet. So that's why I'm going to be trading these kind of inflationary plays, more or less, these kind of risk on moves heading into next week. But be warned, overall, the markets have started to flash amber warning signals about this rally in equities. And I do think we're probably, this quarter, as I've been saying all year, I said at the start of the year, I thought we would peak in this quarter. I think we're getting closer to that. But again, we're not quite there yet. Still slightly risk on going into next week. Okay, so starting with crude oil, we look at crude oil first every single week. And of course, crude oil, the price of crude oil affects the rate of inflation in economies and feeds through into markets as well. Bond yields react off of it, etc. We're not really seeing crude oil go very far. We're kind of ranging between 70 and 79. And this is a really neutral market. You can actually trade this both ways. You can range trade this short from the upper bound, buy it from the lower bound. What I would prefer to see is if next week we could come take out the upper bound, especially if we did it kind of really extended. This is the area. Once we breach 79.908, and we don't have to do it right at this level, but I do short a lot of times from the actual level itself. But usually what I'll look to see is if we're breaching the level, is there a prior high over here, for example? If there's a prior high here, very often you can breach through, test it, and then you can start to roll over. So any breach of the 79.90, I would be looking for a near-term short, looking to capture 1 or 2 days worth of volatility from that. If you really want, if we see crude oil come down breaching the 73.69, you could potentially look for a bounce from here as well, because this is so neutral, kind of range trading. We're not looking at something with directional probabilities. Then you can also look at that. But for me, I would prioritize shorting this given the opportunity next week. It's not one of the best opportunities, just on balance, I may look at it for shorts. But we cover it every week, so even when it's not setting up fantastically, we're still going to look at it in the weekly Forex Forecast video. Okay, so let's look at the markets themselves, starting with New Zealand yen. You can see this is the #1 ranked Forex pair, and it has been for a while. And something in the hedge dash system is once it trades above 50, very often you'll see markets, the first time they move above 50, you'll see them making large consolidation breakouts, very much like you're seeing here, this kind of consolidation, it starts to rally. So we really want to be continuing on with this as long or until the music ends, essentially. We're still getting that risk on, that kind of inflationary surge in equities. We're seeing the New Zealand dollar pushing higher. We're seeing safe havens like the yen and the dollar underperforming. I think that is coming to an end fairly soon, but we would be jumping the gun if we do it now. And in fact, had we have jumped the gun any earlier, we'd be on the wrong side of this. So coming into this week, what I'd like to see in New Zealand yen is any pullback in this market. For any of you who like to trade intra-week, you can look for a breakout before the market tests the lower bound. But here's another example when you get technical stair stepping like this, and you get the upper or lower bound sitting very close to it. If we push through here and we test the prior high, this would be an area I'd be interested in looking for potential long in New Zealand yen next week. Again, looking to capture 1 or 2 days worth of rally to the upside. Just finishing up, something to note very quickly with New Zealand yen. Remember, we have that interest rate decision coming up early this week. And so when you have interest rate decisions, these are often catalysts. When you have catalysts expected or unexpected, you can see these markets pushing to their second upper and lower bounds. So because we have the New Zealand yen with an interest rate decision next week out of New Zealand, you can also look at the 91.27. If the market pulls back, you get an interest rate decision and it blasts straight through. You can look at stepping in and fading that move. Even if it's a strong move, you can look at fading it at the 91.27. Alternatively, of course, if it breaks out intra-week, so it pulls back, fails to test the lower bound, and then you get a spike on the interest rate decision early in the week, you can look for the pullback and the follow-through into the upper bound as an interest rate decision play itself. Those are the setups I'm looking at here next week in this market. Moving on to Aussie yen, this is the second highest ranked Forex pair, and again, it's showing that kind of inflationary regime still hanging about, still in that kind of higher than expected inflation. As a result, we're seeing the Australian dollar, the commodity currencies kind of rallying, outperforming, and those safe haven are still underperforming. So for the time being, still playing this, any pullback in this market, this lower bound sits right at a prior high. So any pullback in this market, I'm definitely going to be looking for a test of the lower bound, a retest of the prior highs, that kind of stair step. And this is going to be the area next week. I'm going to be looking for a near-term buying opportunity within the week. I mean, remember, we're looking at taking trades intra-week here. The levels that you're seeing, I'm not going to go through it because you can click on the Hedge Dash Help Center and it explains everything, but they are for this coming week. And therefore, if the market breaches these levels, they tend to reverse with a high degree of probability. So any breach down below here, I'm going to be looking at buying Aussie yen to the upside for 1 or 2 days profit. And if we start to break out intra-week, if we don't test the lower bound, perhaps I don't get the opportunity to trade it, but you can also trade these intra-week to their upper bounds. Very often they'll do one of two things. They'll pull back, test the lower bound and bounce for a day or two, or they'll go straight to do an intra-week pullback and go to their upper bounds. Usually that's really the only two things that will happen. The third yen pair I'm looking at next week is Euro yen. This is the third best yen pair in the Hedge Dash ranking system going into the week. And you can see we are trending nicely. We've broken the prior high. Any pullback in this market, I would be looking for a test, especially if we can test this high. We come back, breach the 161.35. That is going to be an area I'd be looking for 1 or 2 days worth of opportunity to the upside in Euro yen. Because it may take, a couple of days or even 3 days to get down here. So usually it will revert, towards the end of the week. Sometimes it goes on a Monday, sometimes on a Tuesday, but don't be surprised to, see this market kind of correcting and then trading into this even Wednesday or Thursday. So if we fail to breach the lower bound, and remember, I can only buy this or do nothing. I cannot sell this market. So if it breaks out intra-week, that is an opportunity for a follow-through trade intra-week up to the 164.40 for those of you who have your intra-week strategies. Next to the CAD pairs, starting with New Zealand CAD. Now, last week I was actually looking at shorting. I did short New Zealand CAD, and I shorted it around this area here. It kind of sold off, chopped around, and it's slightly above where I got in. I'm still in this, but this week I can really only buy this or do nothing. I cannot re-short this week. I can maybe cost average that position given the opportunity because I'm still managing the first trade, but I want to be looking for long positions now, so I'm reversing that bias. In New Zealand CAD, any pullback in this market, first and foremost, I will be using to exit my New Zealand CAD short, which I'm just kind of lingering at break even. And if we pull into the 0.83114, especially if we breach this, there's some highs down here. If we breach this, with some volatility and we kind of pause at these areas, this would be a great place I would be looking next week to get involved in New Zealand CAD. Now, it depends how this sets up. Obviously, new information comes in the week, but anywhere below the 0.83114, I'm looking to be a buyer of New Zealand CAD, given the opportunity next week. Next is EurCad. Now, I can either buy this or do nothing. Selling this is not an option, and I have had people say previously that these levels are too big, that this can't happen within a week. But these are for a week. Sometimes when I zoom in, it might distort and it might look more zoom in, depending on the time frame or the rest of the charting. But these levels are definitely for the coming week. Any pullback in this market is viewed as an opportunity to look for buys below the 1.4530. And if I get that, I'm going to be looking at holding that for 1 or 2 days. But also, maybe we pull back and you can see it's already consolidating. And again, this is where it comes back to having a plan, trying to be predictive somewhat, but ultimately being reactive. If the market comes back and rallies like this can very easily set up this pullback, that follow through setup I told you about, pushing into the prior high. Wouldn't be surprised if it tested this high as well, if it breached the 1.4722. But I cannot short this. I can either be a buyer or do nothing next week. And the final CAD pair is AuCad, setting up a really nice bull flag. You can see this momentum, just as what we looked at in EurCad. You've got that momentum, then you've got the consolidation already taking place. Any pullback in this market, I can either buy it or do nothing. If we breach the 0.8767, I would like to see this come down, test these lows. That would be great. And then I would be looking for 1 or 2 days reversal in this market. And as always, if you are trading intra-week and you've got your own strategies, any pullback into this area, I would be looking for that follow through into the upper bound of the 0.8933. And what happens up there? You're unlikely, with roughly a 30% expectancy, to continue higher. So if the odds are against you once you breach this high and you've already bought that week, any intra-week trade, this sets up a good profit-taking opportunity. Moving on to the dollar pairs, starting with New Zealand dollar. Now, this is a market I can either be long or do nothing. Selling is not an option. So once that bias is taken out for me this week, this becomes my buying opportunity, and this becomes my profit-taking opportunity. So any pullback, I'm going to be looking for 1 of 2 things. I'm going to be looking for a test of the lower bound, the 0.61260, and this is what I'm going to be looking for, 1 or 2 days reversal. And if we break out intra-week, probably on the interest rate decision itself. So, we're consolidating, then we get a hawkish RBNZ. This reprices rates higher in New Zealand, the New Zealand dollar pushes higher. You then get a pullback, and then post the interest rate decision, you get the follow through into the upper bound. The only caveat I would say here, because the US dollar is not as weak as the yen and not as weak as the CAD, if you get a very bearish catalyst for the New Zealand dollar, maybe reconsider fading that from the lower bound. Generally speaking, you want to fade things from their second upper and lower bounds after big news events if you're going to do it. However, if it's pretty much a non-event, so although I wouldn't buy down here on a very hawkish, in other words, the New Zealand sells off very hard, I wouldn't buy this level. What I may do is, if we get a consolidation and it's more or less an as expected event, so there's not a very bearish catalyst for the New Zealand, but it's as expected, then if it tests the lower bound, I'd be looking to potentially fade that. So just bear in mind, I am long on all the New Zealand dollar pairs. However, if we get a very bearish catalyst from FOMC, I would probably filter out some of the least good New Zealand pairs, so New Zealand dollar, maybe even New Zealand CAD, and focus just on New Zealand yen if you want to fade that. Next is euro dollar. Now, this is a market I cover every week, but it's in this week because it is one of the top markets I'm looking at. It's not as good as EurCad, it's not as good as New Zealand CAD, New Zealand yen, some of the other ones we've looked at before this, but on balance, it is a buy or do nothing heading into next week. Now, last week, this was a market I actually shorted from the upper bound. Those of you who are following on last week, this tested the upper bound and immediately sold off, and that was pretty much an entire day's, roughly in a day and a half's worth of expected move in the euro. And I held it for a little bit, but I got out over here. Again, any trade that I reference in the weekly Forex Forecast, by the way, is recorded in the GMT members area. So I'm specifically referencing them. I'm not just talking about trades that nobody can see or has a handle on. So this was a good short last week, and coming into this week, my bias has changed again. It's only just bullish or do nothing, and I do think as we push higher perhaps next week, I think we're going to start to see a major reversal in euro dollars to the downside. But specifically next week, I can buy or do nothing. So any pullback, I would be looking for potential intra-week breakout up to the 1.0903. And if we pull all the way back and we start testing these lows and there's a nice left shoulder, we dip down below it. If we pull back and retest this, that would be a great place next week to start to look for a near-term bounce for 1 or 2 days. Very similar to this, there's your reversal that I'm looking at from fading, and here's your intra-week. See how it drove higher, consolidated, drove higher into the upper bound, and then the opportunity was to fade that above the upper bound. Next is Aussie dollar. Now, Aussie dollar is again one of those plays where still got that late stage rally in equities. We're seeing that inflationary cycle or regime still holding just about, but it is still holding. So I would like to go long the Aussie versus some of those safe haven assets. Any pullback in this market, I'm going to be looking for a test of the 0.64907, and a test of this low would be great, or even this low. And if we start to breach this, I'm going to be looking for 1 or 2 days worth of reversal to the upside in Aussie dollar. I can either buy it or do nothing, which means any intra-week breakout is only something I can buy, and using this therefore as a profit target. Okay, so wrapping up the video with gold and silver. Because of my bearish bias on the dollar, a weak bearish bias, but a bearish bias nonetheless, I favor longs in both gold and silver given the opportunity. And it's gold that I prefer to the long side out of the two. It does show higher probability of being stronger should we get the opportunity to enter it over and above silver. So I'm bullish gold and silver going into next week. I want to be looking for long opportunities only, but I favor gold longs over silver longs. Now you can see here we've already started to consolidate and we're rallying higher. So again, it goes back to that idea that you can get that initial consolidation that I showed you in the euro before it tested its upper bound last week, just a minute ago. And then you get the follow through into the upper bound. Now, if that happens, I can either buy it as an intra-week breakout or do nothing. However, what I would primarily like to see next week is I would like to see this fail, so it starts to pull back, and instead of breaking out with momentum, it just continues to consolidate, test these lows, and below the 2011.62, this is where I'd be looking to step in for potential buy. Now, this is one where maybe I would get in closer to the actual bound itself, because if you look, you have lows over here, which are very close to the lower bound. And then below that, the next one is down here. So it's probably unlikely it's going to come all the way down here unless it has a catalyst, in which case this would be one generally better, from closer to the lower bound. If it does that, I'm going to be looking for 1 or 2 days up in gold next week. And of course, for those of you who like intra-week breakouts, if it starts to break out before it hits the level, that is an opportunity you can look at for longs into the 2059.49. And I, again, would not be surprised if we took out this high in gold. Finishing up the video then with silver, as always, we're sitting right in the middle of a big momentum move higher, and we have this consolidation. Now, very often these highs get retaken when you have this strong momentum, you have this kind of consolidation. So I do think there's a very good chance that silver trades into its upper bound, takes out this high next week. So what I would like to see is, personally, I'd prefer to see this trading below the 22.43, testing this low. And if that's the case, we start to breach down below here and we start to look a bit stretched. This is where I'll step in for 1 or 2 days worth of buying next week. What would probably happen then is the following week, they kind of alternate. So you get an opportunity from the lower bound. Next week, they tend to go from their intra-week range. So it kind of tends to rotate. So if we do get that, the following one would be intra-week. However, if, as always, and many of you like to overlay your own strategies onto the data that we're using here, if you get this failing to take out the low and rallying, and you start to break out here of this kind of downtrend or this consolidation, very often, not often will it go straight there. It will pull back first, and that will provide probably just one, sometimes two, but probably just one opportunity next week to capture, 2 or 3 days worth of movement. Remember, we're trading intra-week. So sometimes you only get 4 days if there's a holiday. So 4 to 5 days of price action is not a lot. What we're trying to do is capture 1 or 2 of them. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com.